Beating the Market, Part 1.
Bill Jones once said, "It is morally wrong to allow suckers to keep their money." Okay, believe it or not, there's a method for beating the market that is so simple many investors would rather not use it because it takes the fun out of the game. It requires virtually no work, no thinking, and no decisions, and it can be summarized in a single sentence. Which of course begs the question, what's the catch? After all, most Wall Street investment managers, roughly 80%, tend to trail the overall market over the long term, despite devoting long hours every day researching companies, tracking the ups and downs of the Dow, and buying and selling stocks and bonds. So how can a small investor read one sentence and suddenly outperform most of the gurus on Wall Street? Here's how you do it. Buy an index fund and set up a checking account deduction plan that automatically buys additional shares of the fund every month. Then sit back and watch your money grow. It's that simple. Termed dollar cost averaging, the system relies on the volatility of the market to ensure that the investor automatically buys more shares when stocks are down and fewer shares when stocks are up. For example, let's say that you invest $100 a month automatically in shares of an index fund. When the market's high and shares are trading at, let's say, $25, your $100 investment would pay for 4 shares. When the market is low, the shares are trading at, let's say, $14 a share, your investment would buy about 7 shares. So you're buying the most shares when stocks are low and the fewest shares when stocks are high. And the real kicker is you can do it automatically through a checking deduction plan, so the process continues to work without any physical, mental, or emotional involvement from you. The question you may have is, if it's that simple and that reliable, why doesn't everyone do it? Why waste your time reading earnings reports, tracking price to earnings ratios, following the market, and agonizing over when to buy and when to sell, if you can use index fund dollar cost averaging with no effort? Why? One word: boring. Investors play the market because they enjoy it. Trying to beat the market can be fun, exhilarating, and exciting. You pit your wits against the gray suits of Wall Street, playing your hunches, making some buys and sells, wincing every time one of your picks takes a tumble, and gloating every time one doubles and splits. It's a lot like gambling. Gamblers play the slots because they enjoy it. If time and energy were the issue, they would just pull up to the front door of the casino, empty their pockets, turn all their money into the cashier, and drive away, instead of spending hours pouring coins into the machines. The final result would be the same, but with a whole lot less effort. But it's the involvement, the act of playing the game, and the rewards you get along the way that keeps the people coming back for more. Here's a challenge to those of you who enjoy playing the market. Set up 2 portfolios, a passive portfolio using index fund dollar cost averaging, and an active portfolio using your own buying and selling strategies. Compare the results periodically and see which portfolio does the best. Unless you beat the odds, your passive, worry-free portfolio will earn more than your own actively managed portfolio. If you're new to investing, the first challenge you'll face in your battle of wits with the stock market has nothing to do with the whims of Wall Street. The first challenge is to overcome inertia. Take action. Get in the game. The best way to start investing is the Nike way. Just do it. Pick a stock, whatever strikes your fancy. Open a brokerage account and place your order. It is irrelevant whether the market is high or low, or whether the economy is up or down. The important thing is to just get started. Only then does the real learning begin. Here's an action plan. Open up an account with a brokerage firm. If you plan to make your own picks, use a brokerage firm that doesn't charge commissions. Those are easy to find today. 2, pick a stock. 3, place your order. 4, watch and learn, and repeat steps 2 and 3. Don't worry about your inexperience. Even America's most successful investment managers were inexperienced novices at one point in their lives. But they took the first step. They bought their first stock and began to learn how the game was played. Investing is no different than any other pursuit. You can follow sports for years, watch it on TV, and read about it in the newspaper. But until you lace up the Nikes and get in the game, you cannot possibly understand how it is played. Similarly, you can follow investing from the sidelines, read some books, attend some seminars, and watch the financial news. But the only way to learn the real lessons of the market, the emotion, the discipline, the execution, is by putting your own money on the line.
This is the end of part 1. Please go to part 2.